India, and not so much in with a genuine intent of a funding. So the funding are still happening on a hyper growth ecosystem in India, which is not very well distributed. That essentially means is that it's happening in a consumer space. It is happening in a, lendings and all. Lending was slightly easy also from to pick up on a funding because all the business in India has made essentially money in lending, right? So
To be very honest, if I was a VC, I wouldn't have funded myself. Like that's how bad the presentation was.
To build scale, you have to think scale.
Sometimes I think too much of money restricts innovation. I think that's a sad part.
So destiny finds you on the road that you take to avoid it.
Whenever you get seat on a rocket ship, you don't ask which seat.
We didn't really ask ourselves like too many questions in terms of how big can we get it.
So it was very, very hard to explain what is UGC.
If you want to implement something, first dirty our own hands.
For me, 1 million to 10 million is where scale.
So again, we had basic teams, struggle, but every day was just learning, which was just amazing.
Listen to founders about their stories and how they built their startups. Here on Maharajas of Scale, with me, your host, Krishna Jonakadla, co-founder of Mango Mobile TV and Vouch.
Hey everyone, this is your host Krishna Jonakadla from Maharajas of Scale. Today we have an exciting guest, Satyam from entity in fintech. For a lot of us, money actually, there's a Sanskrit saying called Dhanamulam idam jagat, which means the whole world runs on money. And for those of us who don't have enough money, obviously we borrow to build a house, to buy a car. And today we have Satyam, who's the founder and co-founder and CEO of LoanTap, who's enabling loans in a lot more easier way. Let's hear from him. Satyam, welcome to the show.
Thank you, Krishna, and hi everyone.
Awesome. Tell us a little bit about yourself, Satyam, and what you're working on right now.
So at LoanTap, it has been 5 years of a journey now. Looks like more than a decade, and particularly in the backdrop of the kind of events, both globally as well as in the micro financial environment that we have seen in the last 3 years. I think those are events which many of our seniors have not seen for hundreds of the years. So many of those stuffs are more like at early stage warning signals. So in this context, lending business, we have always seen it's about enabling. Lending is never a product in itself. Okay? Money only enables you to buy an experience, buy a product or a services. So all I have to do is that I have to enable happiness. I have to enable a particular need. So and that's what we love. So this is something we have been doing for last 20 years, and particularly into certain segments of India, which is fairly credit-starved society. It really gives you a pleasure when you are able to help someone achieve a particular milestone, a particular goal, or a particular need, which could be like as basic as a medical need, access to a medical facility, which could be as basic as access to a good education, or which could be like flimsy and good as having a mega wedding organized and funded, or having a foreign holidays tucked along with the family. So yeah, I mean it gives an immense amount of pleasure to ensuring that people are able to achieve it, and in a way, the way we see lending is more like a future cash flow discounting, right? People are able to buy something today which they would have to save for years and years to achieve something. So by the time your age passes, you pass a particular milestone, you will stop enjoying a particular kind of a car or a particular kind of a bike in a particular age when you are able to actually buy it from your own savings. So it's more like you are discounting your future, and that's what we love doing it here.
Awesome. I just thought you mentioned marriage as an interesting premise. Although you said flimsy, the whole Indian economy seems to run on marriage. People's lives seem to run on marriage. I remember a scene in a Telugu film. I speak Telugu. That's what my native mother tongue is. And there is this rich businessman, and he's got a, as the cliche goes, he's got a beautiful daughter. There's a happy-go-lucky young man who falls in love with her, and this guy asks him, he interviews him, he asks him, what's your plan? He tells him, I want to get married. And then, what will you do after you get married? He tells him, I think we'll have kids. What happens after you have kids? And his response is, well, I think the kids will grow up. What happens after the kids grow up? And his response is, I think the kids will get married. And what happens after the kids get married? And then his response is, they'll have kids. And finally, okay, then what happens? And his response is, I don't think I'll exist after that.
Yeah, no,
So-
actually, Krishna, marriage is something like which is the core of many of the way we have been brought up in India, and so this story pretty well tells that sums it up, right? So you grow up and you get married, you have kids, the kids grow up, so that that is where we are as a and we thought that at some point of time, this whole gala affair around marriage is going to solve people becoming more and more educated. They'll stop spending that kind of a money on it. However, we are seeing a very different trend. Even the well-educated class and all, it has only taken a new leap where you have started looking at a destination weddings and all those Jodhpur, Jaipur, Maharaja style weddings and all. So
Right.
it has taken a whole new meaning.
Yeah, somewhere I think Samman crept into the whole psyche, and everything that we do and did had got to do with this thing called Samman. And the funny thing is, as the day we severed the relationship between Samman and what we actually did, all sorts of fancy notions entered that, right? But tell me a little bit about yourself. How did you end up in this? So what's the backstory on that one?
So it's most of the stories which is still available both globally as well domestically. So not too many coming from an agrarian ecosystem. So my father being the first generation into a job and classically government job. Again, belonging to a small town, Mofussil towns in faraway Bihar, and growing up days was all about getting a job. Okay, so that you can afford a family and the same story, right? So that's where we grew up to get a job. Okay, thankfully, life happens in a different way for some of us, and for some certain reasons we had to. I personally got an opportunity to study in Delhi, and so I left Bihar to study in one of the best universities, which is given to us, Delhi University. And while graduating, we were mostly we say that a lot of us is given or a lot of us are made by the society, right? So what we learn from the society, what we learn from our friends and our colleagues or our classmates in a Delhi, that is what shifted us from a normal job seeking individual to people who feel that they can make a difference to the society. And the first job was which always remained in the mind is that if getting job was the biggest task, can I get a job first and then can I create job? So doing a startup or doing business was more about ability to create job at any point of time, and that's something which kept on playing in the background. And then as life happened, I moved to one of the largest private sector bank in India. Worked there on the lending side. Retail asset is the broader category that we talk, and we saw again salaried people like us who had seen the mobility in terms of coming from a smaller cities to a larger city. Urbanization was happening. The education side of the mobility was happening. The wealth side of the mobility was happening in India, while as a country, we were moving from something like about 700 US dollar per capita income to about 2000 US dollar kind of a per capita income. We saw it all happening where a mass was migrating from a low income to a middle income or a higher middle income category. So we saw it up very closely by working in a retail assets, funding house loans, housing loans, and all. People buying houses, creating a wealth out of this category of asset, and we saw it more like an emotional moment and less like a business opportunity in the domestic ecosystem. And yeah, as we kept on building our own understanding of the segment, at the same time, as a business, you also get a strength that now you are at a level, even in the country like India, where the job safety is there to a degree by way of a skill set that you have built in a particular business, and the fact that at some level it's more like a pyramid structure. So like four or five of you are at all the senior position in the industry. So you knew that at one level up or down you will find the job. So people coming from a middle class ecosystem, having a job or having the surety of landing a job is what leads you to do innovation. Okay. Whether it's from the IIT, whether it's from IIM, it's about the ecosystem that you have landed up in an ecosystem where you'll find a job. Okay. And so you look forward to innovate from there onwards. So some of it happened for us at a middle age when we had done enough of a banking and we knew a lot and more about it, that yeah, I mean, we are in a secured ecosystem. And that is the time where we took the next leap and say that now let's create something about which can support more dreams, many more colleagues as well as friends from the ecosystem, and also people whom you wanted to employ or whom you wanted to help buy a better product, or different category of society people who can come and join and work, which doesn't get hard casted into the category of institutes or the category of the qualifications and all. So those are the stuff which was the driving factor, and wealth creation happened, in the way. So if you are chasing a larger objective or a larger passion, wealth, we typically saw even in our career that wealth happens. So wealth is not something that is chased; it just happens.
You think so? Wealth is something that actually happens just like that.
Yeah, it just happens. So again, in a classic Indian ecosystem, you always had a Saraswati and a Lakshmi, and a conflict between a Saraswati and a Lakshmi. And what particularly we have seen happening is that if you have a Saraswati, or if you have an education or a skill sets and all, then the wealth happens, which is the money happens.
Pretty interesting. In fact, I used to espouse that view. So I want to go back to a couple of things that you said. One aspect is job usually was the end goal, and somewhere in your mind, creating jobs for others and creating opportunities for others actually crept in. How did that exactly happen? And did you always nurture an ambition to be an entrepreneur?
Yeah, so as I said, that entrepreneurship was more of how from a time to time society kept on giving us a better idea. So in growing up in the Mufasil towns of Bihar, you never really imagined yourself to be an entrepreneur, and that too becoming an entrepreneur, which is a capital intensive. So becoming an entrepreneur in India was always about availability of a capital, availability of the wealth. So
right.
In the industrialists, kids are the one who were becoming entrepreneur in India, not the people coming from the average societies, or in an outside ecosystem, or outside closed ecosystem. So it was never imagined. So like we always used to imagine that if you get a couple of crores, you will do a small business and do all the stuff, and then getting into a lending, which is all about the money. Okay. So it was never a path which was like you designed for it. Okay. It just happened at one point of time when you as well as your ecosystem. So like your biggest critic is always in your family, right? So your wife used to be always your biggest critic. She knows so much about you that she'll be able to tell the truth about you. So when you spoke, or when I spoke to her about my intention of creating this product, which looks to be like a super sexy product from a people who are a salaried, which we were like all of us till that time. Okay. And then she said, yeah, I think you should do it because, in any case, it's a lending business. This is all that you have done in your entire life. If you can't do that, you will not be able to do anything else. So that was a moment of truth or a validation. And that's how the business happened or entrepreneurship happened to me. Otherwise, it was I was growing up well in the corporate life. At the age of about 36, 37, I was heading the mortgages business. I was senior vice president with fourth, fifth largest bank in India. So after that, you also realize that it's more like a waiting job, right? So your boss will become an MD or a CEO, and then you will move up. So at that level, you wait for a cubicle to get vacated for you to move to the next level. And it's no longer about the performance, or it's not like longer about what you bring to the table. It's only about that you have to manage business, you have to grow it well, and then just wait for the next opportunity for to move upward. So having said that, we arrived there, and we were in a decent place, in a safe place. And then there was this streak of adventurism. So I have been an adventure sports enthusiast also parallelly. So which is more about taking risk, but with all the right gears. It's never about taking an unguarded risk. And the guarded risk for me was the market offering me even next level of a job, like a CEO level of a job. So I said that it's not going to be too bad even if I fail as an entrepreneur. So there is always on a mind that what will happen if I fail as an entrepreneur. So even if I fail as an entrepreneur, I'll have some certificate to show to my kids that I had an appointment letter as a CEO. So it's like a validation that if I go back to the same village, it will not be an empty-handed, right? So I'll have something to show. So it was a mix of trying to create the safety net and then taking the plunge or taking the next leap.
That's amazing. I'll come to that village and the adventure sports in a second. I'm quite fascinated by it. This is the first time maybe somebody who, in most people's minds, bankers or people who are associated with the world of finance, other than the Wall Street hedge fund brokers who seem to lead colorful lives, everybody else is supposed to really lead a boring life, right? But I'll come to the. Let's talk about I think it's the first time we've had any guest on the show talk about a progressive realization that the market is changing, there's an opportunity, and therefore entrepreneurship should be pursued. And I think an iconic film that sort of is a sign of the times is Diwar. Have you watched Diwar? Where
many times.
many times, yeah. In my mind, not to insult any Bollywood fans, but in my mind, Diwar is a more seminal film than Sholay. Sholay is just noise and bells and whistles, but Diwar has got an undercurrent. It's an indication of the times that somebody who aspired to a higher life had nothing to look for, but actually take that other path. It was a sign of the times, and like you said, if you didn't have capital, there's nothing you could do. And the only ones that had capital were the ones that had jockeyed into positions of power and business and politics, way before the rules of the game were actually drawn. And if you look at it today, I think all of us can get carried away by the 10,000 Indian startups or 10,000 whatever. India has a third largest startup ecosystem in the world. But I think barring a handful of sectors, I think the scene is changing, but it's not changing really that well. In fintech itself, the lending business that you're a part of, imagine the savings and loans crisis that happened in the early 80s in the US. They were all the cooperative societies in India which are actually the credit unions in the US, which is a direct parallel, which is all members, they've all contributed, and these people are actually lending. And then there, the underwriting guidelines are a lot more less stringent than your mainstream banks. It feels like we are going through a mini version of the savings and loans crisis in India. But if you see the larger sectors, take power, infrastructure, mining, transportation, communications. Even in communication, when you look at mass media, all of them still have the same legacy houses, right?
Absolutely.
And it seems like we've entered an era of the internet whereby in the internet it's mostly a zero-sum game. The one that gets to become the largest because of network effects becomes so large that another 30-40 years it becomes, unless something happens really drastically, that so if you take Facebook as an example, it is, who can think of actually dislodging Facebook from its dominant position, right? And if we take the Indian media houses as an example, outside of Times of India, you really have to struggle to name the second largest, at least in English. Maybe you have Dainik Bhaskar and then some of them in the Hindi hinterland, but otherwise all of these people have got into that power, and capital is still hard to come by in those places. So, and we have enough regulation that prevents creative destruction from happening. If anything, it is mostly creativity destruction as opposed to creative destruction. So, but fintech, funnily enough, seems to be in a whole league of its own. I think the payment innovation that National Payments Corporation of India has unleashed, I think, and I'm just personally waiting to see UPI happen on credit. And the day that happens, I think we are going to see a whole host of innovation get unleashed. So it's interesting that your wife's input said you've been doing lending your whole life, and you've seen so there are two factors. One is the ecosystem right now seems like there's an opportunity to be an entrepreneur, and even if you did take that break and then come back out, a CEO job would be waiting for you. So you like a typical banker, you saw this like an almost no risk scenario, if I may put it that way, right?
Absolutely.
But I'm intrigued. Go into a little more about that starting phase. You started before the demonetization event happened, didn't you?
Yeah.
And then
Right.
how long was it before demonetization happened?
So about 18 months before.
Okay, all right. Talk about those initial days, and then it is one thing to have institutional backing, because in India largely distribution is still a legacy game, while I think it is changing, but the lack of data, the lack of identity information, the lack of information about trust scores and stuff like that actually makes it challenging. So what exactly, in addition to these macro indicators you spoke about, that on the personal front, your risk would be limited, but otherwise the country itself was changing. So speak a little more about those initial beginnings, and what was the product like, and how did it take off?
Yeah, sure. So, Krishna, let me also go back a moment more and just try to plot it beyond what you said about UPI in credit, or even about the stuffs that you were mentioning about. Yeah. So about the funding or the businesses which doesn't get funded in India, and to be honest, we regularly meet these kind of entrepreneurs or researchers who have built a great product or a great path breaking research which they have done, even on a basic fundamental stuffs like healthcare and all. And those projects doesn't get funded, or it just gets easily copied in the name of dangling some funding opportunity, and then by the time you are only looking for to copy it out by a larger corporates in a active pursuit of the business idea, and not so much in with a genuine intent of a funding. So the funding are still happening on a hyper growth ecosystem in India, which is not very well distributed. That essentially means is that it's happening in a consumer space. It is happening in lendings and all. Lending was slightly easy also from to pick up on a funding, because all the business in India has made essentially money in lending, right? So finance is a critical part of any business, right? Whether for a day, or whether for as a credit cycle, or as a bill discounting, or as a debtor day or a credit days. It's essentially a part of running an economy. So this is because it has been a fundamental level. And as I mentioned earlier in the conversation, that as a country we are credit starved. So like our personal debt to GDP ratio is about 18%, 17 to 18%, which is at 60% in China, and in countries like US, it's at a abnormally high rate, like 110% kind of a stuff also. So credit funding in credit was not a really a rocket science, which people started doing it. But yeah, having said that, are the good businesses struggling because they are hard to build, incremental build up, and not like a hyper growth ecosystem? The answer is yes. And we feel pained by seeing those good entrepreneurs not surrendering to the market conditions and not being able to pick up the money to build it. That was on the funding ecosystem itself. Coming back on the UPI and a credit, yeah, I think there's a lot to talk about it. So let's park it at the moment, and we'll come back about it, and because we see it happening. So we'll have something to talk about it. About the early days of LoanTap itself, so yeah, has been very challenging. Has been very challenging, particularly coming from a banker mindset, where you are trying to say that there has to be a risk aversion, the money has to be collected. It is not about the GMV, it is not about the burning. So like we are profitable for last 3 years. So like after the first 2 years, we turned profitable. Very few fintech, other than maybe one or two, have been profitable all this while. Forget about even the largest funded ones and all. Even the recent filed DRHP, which is for the listing and all. Even in India, startups are claiming that we may not become profitable, or we do not know at what point and in what methodology will be profitable. But yeah, it's a large business worth building. So we are going for an IPO. So profitability, risk aversion, and all was more about being conscious about it, both as a part of banker upbringing and all. So we were not, as we were going into a demon, we chose the sectors also very carefully. Okay, these sectors were not like white patches in the economy. It was incrementally better. Okay, so like we were offering a product to the salaried people. Salaried people were getting a good product in the. I mean, they were getting a credit in India, particularly into the large cities where we started cracking first. It was the quality of the money, or the quality of the relationship between the institution and the individual. Okay, so that is what we are attempting to solve. So since you are not really attempting to solve a white patch, unknown territory, and all, so that didn't really. So some of these events actually come as a blessing in disguise for us. So like when entire market was funding MSME segment in India, or a credit providers who were doing an MSME segment in India, looking at that, there are about 60 million MSMEs, and the credit is available only for the handful of a few, and all those stuff, all those numbers were there. We chose to be a salary dominated, or a consumer dominated segment, where we say that we will give a good product to bankable people. Okay, and we will not really create a credit product where we do not understand how to underwrite. So underwriting remained core to us. The technology was more about a better product creation, better user experience, okay, and it was less about a disruption, okay. So our technology was about going closer to the customer, and not about going to a very new segment of a customer which is not catered by a traditional lending institutions. So we are incrementally better. So since we are incrementally better, these events looked like the moment that you have been waiting for, because when Demon happened, the entire MSME portfolio went for a toss, okay, and our entire portfolio was on the salaried side, okay, and a consumer people like any of us, you or me kind of a side. So that's too true. Which proved two points which we always say, that in a lending business you have a two kind of a risk. One is you run a risk on the business, and the second you have a macroeconomic risk on the cyclicality, whether it's this. On an individual side, as long as the country is growing at about 7% GDP, 5% GDP growth and all, the job losses are not as stark as, or by design of the social structure also, we do not boast that we have sacked the 10% of our employee or a 20% of the employees. So even the retrenchment and all happens in a very quiet way, so that they get accommodated in some other organization. People get a long rope in India. So the cash flows was there. The nature of a cash flow might change, but the people's cash flow doesn't get disrupted on a salaried side. The way it gets disrupted in a business side, which could be not a doing of the business itself, okay, which could be a doing of the larger call which has been taken in the economy, or some other conditions, including something like a COVID, like a pandemic. So you had demonetization. You also had some lesser known event, like the courts going after and saying that you will not have a liquor shops, because on a basis of a cash flow, you discount. So you said that there will be no liquor shop or a liquor serving restaurant near the highway, okay. And this entire episode ran for almost like about 7 to 8 months before things got settled, that some kind of a stuff will be allowed, or people took the losses and people moved ahead. So these events have been happening more frequently in evolving country like India, where the rules and regulations, so that the situation is not as matured as it is in a far developed world. So the regulation is also evolving. The sector has its own challenges, sometimes from a dumping in trading segment from outside, export restrictions, import restrictions. You have all kind of a variations which keeps on coming in. So we decided that we'll cater. I mean, our ability on a small balance sheet was to have a lesser risk. So we decided to stick to a more seen and validated salaried segment by creating a better product. So since the risk appetite was well defined, okay, we were never really like, so it was, the trouble was maybe like, you had even before after demonetization, you had an ILNFS, okay, which was like, so as I was mentioning, you had the biggest banking crisis or the financial institution crisis in India, in between 2018 to now, okay, when you had large NBFCs going down. You had a couple of banks going down, including those credit cooperative banks and all, and a large bank like a Yes Bank and all, which almost went through the entire network erosion before got funded again by an SBI kind of ecosystem. So we saw it. So it came more like a blessing, because the market was expecting you to go berserk and just lend because people are looking for money. And we say that, hey, it's no longer only about a lending, it's about prudentially lending, it's about consciously the money has to come back for a business model to establish itself. So that way, less moments of anxieties. Anxieties to us came more from the external world, less from the business itself. When I say external world, it is about people in the ecosystem coming and asking you the same question. Hey, how are you going to handle now that demonetization is there? How are you going to handle now that COVID is there, or a moratorium request is there, or this thing is there? So internally, system-wise, we are more comfortable, but it was more about answering in the global anxieties, like you need to have a runway for 2 years, You don't know whether the second wave will come, third wave will come, how long the pandemic will go and all. So yeah, we had gone through those anxieties, but as far as the business building itself is concerned, we kept on getting good support from the capital or the equity market from a time to time, and not much complaint from the debt ecosystem or a borrowing ecosystem, because we blend equity and a debt to lend to and we are our own balance sheet lender, besides now making it available for other lending partner also to come and support and bring the product on the platform. We essentially have been building our own balance sheet to demonstrate that how the business could be done profitably with a good cost and a credit loss structure. So not too many moments of anxieties, but yeah, I mean, you had a lot to answer.
That's interesting. I'll touch upon the prudence angle in a bit, but let's unpack this better product. So you, especially for the salaried class, because you have documentation, you have CIBIL scores, you have Form 16, you have income tax returns for several years, you possibly have, for people who have all of this, they obviously have years of banking relationships, which means for somebody who's making an underwriting decision, all they need to do is they need to look at all of this, whether it is available immediately in the form of easy data, which is right now, or if you had to pull a few things, that's a separate aspect altogether. But you were, as you yourself rightly said, you were going after possibly a red ocean in the blue ocean theory parlance, and you were trying to make the experience better. So unpack that a little more, because you've been in ICICI, you've been in IndusInd, both very at least as an outsider, I've been an ICICI customer for a very long time. These organizations adopt technology, and IndusInd likely so as well, because that's the best way for them to differentiate themselves. So they go after innovation. So what is it that you saw as something that you could do differently and you could do better, and unpack that better product angle a little more?
Sure. So if we look at the banks or the larger institutions, the technologies are more made to support the existing system and the processes. Okay, as a starting line that I would want to convey. In startup ecosystem, or when you start from a technology in a mind, technology is challenged to do something which is unimaginable otherwise. So their technology is adopted. Here technology is challenged, that hey, why we can't do this from a technology, or why the technology cannot improve to this level. So there's one is adoption of technology, the other is a challenging the technology itself, that you create a newer boundary for the technology. So the startup was more about doing that, challenging the technology itself. Now, where all it has happened and how does it differ from a cutting edge technology, the banks being at the cutting edge, and from the technology itself taking over or forming the core of the customer experience or the product. So, if we look at the lending, retail lending per se, it has a four key arms to it, or a key angles with which you engage or you differentiate. One is the distribution itself. Okay, so when we talk of a distribution, then the distribution is what now how the distribution has moved is that when I started lending in 2016, then only about 25 to 30% of the loan was originating and happening digitally. Okay, in the Indian ecosystem. Now the segment that I cater to, 76% of the loans are originated and completed digitally without any human intervention, in the sense that you don't have a people going and meeting and all those stuff. So the distribution was changing, and the people's behavioral aspect was changing, because the new borrowers, the millennials, were coming who were digitally native, and they had a distaste for a banker saying that I will not foreclose a loan. Pre-close the loan. In India, foreclosure is different as in US. So I'll not pre-close the loan because there is a pre-closure charges of 4%, or for a 1 year you can't pre-close, and creating those kind of exit boundaries on a customer. So it's a arbitrary exit boundaries were created. So the millennial anyway had a distaste for this kind of a banking, where even if you want a bank statement, you have to walk into a bank, okay, a request for a statement of account, and they will say that I'll send you by mail. Okay, not even give it to you, and then they'll say that I'll give you on a mail, or you go and log into a call center or a customer care, and a call center is something which will take about 7 to 8 minutes to reach to the right thing. So the generation had a distaste for that kind of a banking, and many of the fintechs has captured that. It has captured that in full, including the UPI moments in the payment sites and all. So the distribution was moving in our favor. So we knew that distribution will support. Second was product design itself. So a tech was about now we can call it fractionalization of a credit, but we started showing as a sachet moment in lending in India, right? So when you bank, you get a personal loan. Okay, a personal loan comes in a size like a minimum loan amount this much, maximum loan amount this much. This is the tenure. You cannot prepay. You cannot pre-close the loan. This is the rate. This is the fee. So the only arm on which each of us were negotiating as a customer was about what is the rate, what is the fee, and what is the quantum of the loan. Now you imagine a situation, if you are a self-employed guy in India, or a business in India, the instruments or the number of credit products which you have available is unimaginable. You have a CC limit, you have an overdraft limit, you have an export credit, you have a this credit. For every purpose, you have a new design. Okay. Whereas for a salaried people, hey, this is the loan which is available, take it or leave it. Okay, so against that canned product approach, we say that we'll do a variation, and the place to do variation was for us on the way customer wants to repay the loan. It was not about taking the loan, it is how he wants to repay. So which was about maintaining the relationship with the customer. So we made something like a EMI free loan, right? So EMI free loan is like a installment based loan, but the fixed installment is only the interest part. Okay, like a minimum payment charges on a credit card. Okay, and so that was the instrument, and the principal payment you can bullet prepay based on when you get a bonus, you get a incentive, you get some other monies and all. So traditional imagination is that a salaried guy gets the same money and have the same expenses every month. The normal, or the way we looked at it from 2004 onwards, is that entire IT system in ITS ecosystem in India runs on a quarterly variable pay, which is a very different amount getting credited in your bank account at the end of the quarter, okay, as against the same amount getting credited every month. Okay. Same was on the bonus and incentives for a mid to junior level employees in the banking systems and all. And then you saw the similar stuff happening even on the expense side. So you had like Diwali expenses, you had a different. So sometimes you wanted to have more money with you, not pay the same kind of installment. So this cash flow variation is what we attended to. Okay, by giving an overdraft facility, by giving, which was not offered to salaried. So we started giving an overdraft facility to salary. So then giving an EMI free, having a step up repayment plan. So like you are early stage of a career, you do a lower installment. Next year you will get an increment. So you do a normal installment, and then you will get a better promotions and all. So you do an accelerated repayments and all. So we created these kind of variations, along with removing the hurdle around prepayments, relationships, next take off the money and all those stuff. So this is where we attended to the product side of it. So you had a distribution attended, you have a product attended. Turnaround time, of course, we always knew that we'll beat the banks or the institutions hands down. So there was no questions around the turnaround time itself. The fourth part is, of course, the cost of capital. Okay. And cost of capital, we always knew will take time to solve. So we did not say that we'll solve the capital problem first. We said that I'll reduce the operating cost first. Okay. So because you have a more capital, if you spend more in managing those businesses, okay, then it eats into your bottom line, right? So I managed the technology also now allowed me to manage the operating cost. And so instead of solving the cost of capital, which we thought that rating and all, it will take time, we solved the operating part of it.
That's pretty interesting. So for a end user, what it essentially meant was I had a product which had little to no frustration associated with it, right? So what I'm I think I can relate to that. I still remember with ICICI there was an auto loan, a car loan, and we wanted to prepay it in the 5th year, in spite of making on-time payments for four straight years. In the 5th year, there were pre-closure charges, and I'm a chartered accountant, and I'm where required, I'm a man of numbers. So there was a certain degree of angst in me, because it was virtually like whatever remaining interest income accrued for that period, almost maybe a small discounting factor was applied to it, and that was levied as a pre-closure charge. So I can understand that. So essentially, loans with other than the repayment string, no other strings attached, and all of it was digital. So because a lot of expenditure goes in offline, you have feet on the street, you have people possibly verifying. So therefore, you said we'll bring down the cost of distribution, which is the operating cost. There are two parts. There's the ongoing variable cost of originating the loan. That's one.
True.
And then there is the input capital cost. So the input capital cost is not something that you can change overnight. It's not that much in your control. There are a lot of macroeconomic factors and possibly a whole host of other things as well. And then you have the real things that you can actually control are your operating costs, which is your variable. So your rationalization was that we know the frustrations that people have with these traditional loan products, even if they are from, let's say, technologically savvy institutions. But technology was merely used as a convenience angle, as opposed to really giving people products that can be configurable to their need. So that's interesting. So the world of finance is if you look at the world of American finance itself, where all sorts of exotic instruments are born on a daily basis, it is not surprising that there are opportunities. I'm sure this is just a tip of the iceberg in the possibilities that exist. I still remember, I think about 18 years ago, my father was purchasing a car, and I always had this entrepreneurial desire in me. Although I was working for a very well-established consulting organization, I had a reasonable salary for those times. I still didn't want a multi-year loan. I said, I don't want a 5-year loan. I don't want to pay interest. Tell me what I can get. And funnily enough, at that point in time, I think Citibank had an option of a 1-year 12-month EMI. The EMI was high because it was just 1 year, and since there was no interest, there was significantly no possibility of default. So the default penalties were very, very high. I actually accepted it because for me that fit very well. The 1-year time horizon was perfect, and the amount that I wanted covered, the money that my dad could not cover, I got it covered. So I can relate to the real convenience in the configuration of the product, really bringing happiness to the borrower, which is the opportunity that you actually saw. Amazing. So going to the user acquisition side a bit, I think. So did you launch an app? How did you begin? How did you acquire your initial customers? How long was it before you got your first customer? Talk about those aspects.
Yeah, so from the time that we started conceiving the business, the biggest roadblock was more about getting the regulatory approval because lending in India is regulated, and it took us about 4 months to 5 months to get all compliance done, including the required declarations in the medias and all those stuff. And the moment it was done, within from the next day we started doing, because that is what we had prepared for the first 4 or 5 months. And while preparing for it, some of us were lucky to have a tech CTO or a co-founder. Most of that has been one of the most challenging jobs in India, getting a co-founder who understands the technology or who can code. So it's beyond understanding. It's a cherry on the top of an ice cream if you get a, or a cream if you get a guy who can code also. Okay. And then we actually evaluated multiple technologies which was available in the ecosystem. And we realized that all the technologies is essentially trying to cater to the way the bank had asked them to make. So we actually had to write a code from the scratch, okay, between one guiding and the other one implementing it, and we got it up and running surprisingly in fourth month, fifth month. We didn't have to do it on Excel, unlike what you would have wanted to do in a startup. That hey, let's start from Excel and then we will migrate to a system. The first loan itself was booked on the system. So yeah, it was a 5 month of preparation essentially because of the regulatory requirements which you required. And then once we moved there, it was a absolute such a super highway because the products were unique, and while my competition was advertising that I'll give a loan at 11%, somebody at 13%, somebody at 12%, we were advertising on a Google and a social media that I'll make the loans, the installment lower by 40% or a 50%. So it was about making those conveniences sell, and getting a search or even a paid ecosystem didn't really burn. I was still operating within the given domain of about 2% kind of an acquisition cost, if not less. So that worked for us, and yeah, we started from the web version because we were focusing more and more on creating the backend. Plus, we also wanted certain set of information from the customer, from the like stuff a bank statement and all. The idea was never that we wanted to scrap or we wanted to pick up a data which is illegal or which could be used, because we had seen enough cases in China, not in India, but we have seen enough cases in China where the personal informations were misused by the institutions or the individuals who were into the lending business. So we were absolutely careful about that. So we started with a web version. We had our app in another 8 months, 9 months down the line. Web was doing fine. So there was also resistance. Why app? It's just doing as fine. But when we did an app, then we realized that it just doubles up. So it's not as if you are catering to the same same audience. It brings a very different set of audience or a user base itself. So we had an app, and we also experimenting with making more like a conversational application on a WhatsApp. So you can make the entire loan application on a WhatsApp. Now imagine filling a 20-minute form on a bank's website as against doing the entire loan application on a WhatsApp at any point of time. So that's what was the focus on the application side, and even nothing to complain so far. And beyond that, we had to migrate because this was own property. But as a business de-risking, you always try to have what else should be done. And one thing was clear, that we didn't wanted to go back to the traditional distribution mechanism, because that was a losing game, which we decided in the beginning. So we started working with a large data companies as a partner. So we say that, hey, I mean, I don't mind being like a product provider on a platform, even if the platform is someone who is doing a travel, or a platform is someone who is doing a groceries and all kind of a site, because they anyway sell other products, so let them sell the loans. So we become a integrated part into the embedded finance and all without actually talking about it. So our sense was more about the data, that I'm getting a validated data which has a higher degree of fraud prevention, or getting a quality data. And then started working with the partners. So we have leading category leading partners from a travel, from grocery segment, from electric two-wheeler manufacturers, which we have taken a fancy for last 3-4 years. where we have those partners, we generate transactions or we enable transactions there. Okay, in terms of providing credit there. So we have a partnership and our own properties like SEO, marketplace, and all those engines running. So that's how we have been working on the distribution side and keeping it at least 150 to 200 bips lower than our competition, both traditional as well as the new age.
What? How many days to first loan, and then how many days to the first 1,000 loans?
So yeah, I think that was much faster because the first month I would say, as I said, the first loan, if you want to say the development phase and all, was almost 5 months, and then the 1,000 loans was the next 3 months. So you caught up with the Diwali season, you didn't miss it. So next 100 days you had started clocking that kind of a number. So it has been really fast in terms of overall volume wise. If you see which we typically see on AUM wise, then the first year you ended at 10 crore of AUM, and the next year you ended up with a 60 crore of AUM. So it was like a 6x in terms of AUM growth in a year to year.
What do the numbers look like today in terms of number of borrowers, all of that kind of numbers?
So now we have cumulatively we have done about in domestic currency we have done 700 crore kind of loans, which is about 95 million US kind. Number of users though is at about 2.5 lakh, but the number of loans are still 35,000, and the active AUM is about 55 million US kind, so about 380 crore kind of.
Interesting. And I suppose this is just the beginning, the way you see it, because now you've unleashed a set of possibilities where, because we are seeing this happen even in InsurTech, people are taking a look at policies that have a great deal of hidden things in them. Although in loans, it is sort of immediately palpable, it's tangible, because the moment you pay your first EMI, but in insurance, the day the claim is made, either for property and casualty insurance, or the day the final payment for a life insurance, or the first payment comes up in endowment insurance, the real impact of that policy doesn't actually hit. So the hidden terms and conditions, or the so-called fine print, as we call it. So now that you I've said scratch the surface of transforming how loans are sold. Where are you headed next? What do you see as the next possibilities?
So what also helped us, Krishna, is that what we got initial 4-5 months to build the technology or build the company before going for the first product in the market. Similar event happened last year for us during the COVID. When for a long time you had a uncertainty both on the global market and uncertainty, as well as regulatory uncertainties also, because we were dealing with moratoriums, we were dealing with different regulations which was coming every other day. So that gave us a time to just sit back and work more and more on our technology and on the user side and build thoughts about it. So now we are about bringing the entire banking experience on a card. So convenience, which we started from an overdraft. Okay, we have taken it all the way to a plastics. So plastic in India is still like highly underpenetrated. You have about 60 million plastics, and active customers wise it's less than about 35 million because most of the people are 2 card user or a 3 card users kind of a stuff. So the plastic is not there. At the same time, uses are like a compulsory. So like today in a current environment, you can't be mobile, you can't book a railway ticket if you do not have a UPI payment mechanism or you have a plastic in your hand. So it's like it becomes so basic in contactless system where the government itself is not allowing a ticketing counter to open for a railway. Yeah. So that makes that the need for a plastic is not only for for credit, but need for plastic is also about just doing a transaction itself. You can't do a transaction without having a plastic or without having a UPI handle and that kind of stuff. So we took this time to build some of these new product categories and that essentially means both. I mean, going wide as well as now continue going deep on the partnership stacks that we had built. So the demand side partnership is what we built in the first 2 3 years. On the supply side partnerships also, we moved beyond our own balance sheet capacity by bringing in the co-lenders. So the co-lending regulations in India was redusted and refurbished and given to us at what November last year. And after that, you had banks and larger financial institutions looking forward to fintech partners, because they can't open a branch, they can't open a they can't go back to the same touch world. At the same time, there was an overhang of a second wave and a third wave, so they were always looking forward to those situations. That what if your branch is closed? Will you still be able to do a business? So there are fintech partnerships around a co-lending and all that came. That got about 7 8 new suppliers on the platform. So having solved the supply side decisively, and having created the engine for the growth on the partnership side, now it's only about it's like creating a good foundation, and now looking forward to quickly do the casting of the entire structure in a quick. So it's like we compare it like growing bamboo, right? So bamboo for a long time it's seen only under the ground. You can't see it, and the moment it's above the ground, it just it catches a couple of inch every month.
So what does that mean for newer products?
So
For
the
end
newer
users?
products, so the newer products for the end users, it becomes like it's a single place. Both it's a safe, okay. It gives you a kind of a cost-effective solution as against a credit card or a credit card overdue kind of a situation. And the third thing also, it allows you some part of money if you want to be invested into the safer, to the medium safer instrument. So even if you have money lying with the institution, it doesn't go waste, right? So it doesn't lie like it's not like a parked money, like a wallet where you don't make an interest. This money on the card remains where you get an interest if you need a credit. So if you look at a standard salaried in the like mid categories, which we are not serving so much in a blue collar category. The beginning of the month you have a salary getting credited to you, or the end of the month you have a credit credited to you, and 15 16 days down the line it starts depleting. So the point is that till the time it's you have a money, you are getting an interest, and the moment the money is depleting on your account, you start dipping into the credit, right? So on one side you make an interest income, on the other side if there is a need you have an interest cost, okay. But everything happens on a single card. It doesn't happen in a multiple places that, hey, for this I have to borrow from the app, and then I have to take it to my bank account, or to my debit card or my plastic, and from there I have to use it. So everything happens at a one single place. You just don't have to look out.
Interesting. So I think crebit is the term being used for that, where both happen on the same. I've personally felt I don't know, a lot of people outside of the ecosystem or even fintech don't pay attention to it. While Donald Trump was US president, Visa and MasterCard applied a lot of pressure, and added to that the three credit unions, Experian, TransUnion, and then Equifax, applied a lot of pressure on the Indian government to allow them to operate. And there was a great deal of pressure, I think, to also make UPI subservient to some of their infrastructure. Because while Visa and Master, obviously, they operate globally, they're fantastic institutions. They've definitely built up fraud signatures, usage signatures, all that kind of stuff. But at its core, essentially, there is a lending partner or an underwriting bank, and then there is an issuing bank, and Visa and Master are essentially accessing that, saying, okay, X person is eligible for $10,000. Now, this particular number, which is tokenized, right? Essentially, the 16-digit card number is actually tokenized. And because it is tokenized, which is why you need that mag stripe on that card. What UPI has done, because and you need that because you do not have two-factor authentication in the US or globally at least, right? While Europe still has one-factor authentication, and the smart chip in the card essentially possibly is one additional one when it's not really looked that way. But what the UPI protocol has essentially done is virtually made what is representative against bank balance can be representative against a credit limit. I mean, what stops that from happening, right? All of a sudden, you possibly have inverted and even taken away the need to tokenize a number. So therefore, your large-scale hacking of credit card numbers, large-scale hacking of debit card numbers possibly go away. But the US system also has a significant amount of advantages because it's the way that entire system there built is literally for frictionless. So you have a lot of subscription payments, you have a lot of straight-through processing, you have a lot of even your bank accounts can be debited many times with just basic information without your knowledge. But the beauty of it, the reason that exists is because your fraud infrastructure, your liability infrastructure, a whole host of them, your bankruptcy laws, there is a whole ecosystem that's built around it. And in India, because your legal ecosystem, your legal framework, your civil, criminal, judicial, bankruptcy law framework, although I think there are a lot of steps being taken in the right direction,
It's still poor.
haven't yet caught up, and I don't know how long they will take. Possibly we'll have products that will actually nullify essentially the need to make any of that happen now that we have technology to make a lot of that happen. So when do you think we'll see UPI happen on credit? Is it already?
So it's already in discussion with the regulators.
Okay.
The regulators in India typically takes one step at a time. So unlike many other countries, regulation in India does a far better job. It might look like a slow, but it doesn't come up later like our neighboring countries and kills the business. So it only allows you to incrementally experiment, and then goes fully both with the global parallels, domestic possibilities, and everything, and then it's allowed. So some of the stuffs which has recently been allowed on a UPI is like subscription services where you can debit multiple time even in a month or on a next stuffs and all, which has allowed many of the credits to flow seamlessly. On a credit side, what better is also happening is the entire MSME system is getting opened through a network called OKEN, which is again iSpirit is working on it, where you have lots of these GSTs and all kind of information is available, including TREDS and a gem which has been opened by the government. So on a tech side, I think I would still say that the innovations are at the grassroots level. Innovations are far superior in the Indian ecosystem than a control, because here the government or the large ecosystems are creating an infrastructure on which multiple unicorns can run on. So the infrastructure creation is one of the biggest things which is being done in India as against many other countries, which is left out to the private sector. So that's where specifically to UPI providing credit or providing an overdraft on a UPI. As far as NPCI is concerned, they have been pushing it hard with the regulators. Regulator is taking it time, but many things they yield from time to time. So it's only a moment of time that will happen. But by the time what is already happening is that based on the UPI based transactions and all, the companies like LoanTap has started providing a credit. So you do not have a direct credit, but in a gap of a layer with 1 degree of a difference, you have a credit made available in the ecosystem. So not that badly placed at the moment, but yeah, UPI and a credit is the ultimate thing that you want to see.
And I think coupled with that, I think a couple of things need to happen, in my opinion. Improving cost of capital, because we have a very ironic situation, because we have a country of close to 1.4 billion people, despite JAM, which is Dhan, Aadhaar, and UPI, the JAM Trinity, or whatever that is called, the India stack, which ended up in hundreds of millions of accounts getting opened. If we have monetary policy that is so obsessed about inflation all the time, it effectively means that the plumbing of the financial ecosystem is only targeted at a few outlets only. Because whenever there is pumping of money, if there is inflation, that essentially means that the money is not spread as wide. So that's one. Because I've seen that my uncle has been running an NBFC for 30 plus years. Even today, if a business 25 years ago, their cost of capital in a tier 2 town was 30% per year. And even today, if it's almost 30% per year, notwithstanding all the optimization that's happened across the world, imagine if the cost of capital of an MSME is 30%, he literally has no money either for lifestyle or even for innovation, which is why you have so much copycat innovation that happens on all fronts, right? Somewhere this whole notion of improving the plumbing on the policy level has to change, so that when you unleash $1 trillion, you are not always obsessing that, you know what, I'm going to see double-digit inflation. And therefore, as soon as double-digit inflation happens, the government will actually be voted out. That's essentially what keeps happening. That cycle keeps repeating all over, right? No matter what the government does, some inflationary angle comes in, which is why central bankers are so obsessed about keeping a sub 5% inflation, right?
Single mandate.
Single mandate. And that has virtually eaten in. It's become a sort of a viral disease, at least in the financial ecosystem, because that cost adds up. Because MSMEs provide 95% of all services and products in the country. That means if their cost of capital is 30%, that means everybody else is inheriting that cost of capital somewhere, right? So hopefully, something will happen there. Now, what is your perspective in 5 years? Where will we see LoanTap?
So LoanTap is on its path to an IPO, because as an organization we feel that brings in the whole sanctity angle, the board angle, everything to the fore, and that market in India is fairly robust, has a good amount of traction both from the retail as well as the institutional investor ecosystems and all. So that solves a lot of challenges for the organizations. So yeah, the path to IPO is what got. Of course, it got delayed in last 2 years, but typically we have seen an IPO in our segment happening at the 10 times of the current level. So typically about 4,000 crore kind of a book is a good book to go for an IPO. That is where most of the lending institutions has IPO'd, other than one small finance bank, which was at a higher level, but marginally higher level. So yeah, it's a good place to go showcase what you have built. So yeah, that's an important milestone that we are looking forward to. So 2.5 years is typically what it takes to move 10x at this kind of a base in a conscious organization, and that's the path where we have been building it, Krishna.
Interesting. And how have the last 5 years, aside from all the macro events which are occurring with a lot more frequency now, perhaps it's because the world is so connected, that's one of the reasons. What are the surprises that you have seen in the last 5 years?
Yeah, so organization wise, being here both at the cusp of making a credit, acquiring a customer. So being a close here, I interact a place where both I'm shaping up the institutional philosophy. At the same time, I'm also learning from the market, from the customer. Okay, which doesn't happen when I'm sitting in a traditional world where it's the feedback comes in a filtered way. So here the feedback comes direct, right? So our own we have been going through our own cycle of unlearning and learning, right? So the way consumer behavior has been changing, and the way we need to respond is far different today than we set out in the beginning. So we set out in the beginning assuming that, hey, this is how the customer behaves because this is how we have done the loan, this is how we have seen people consuming using the money itself. And then you realize that a whole new generation is coming. So just to give you an example, now the people who are about a decade younger than us, okay, their money doesn't sit in their bank account, right? So their money sits in a five places. Somewhere it will sit on a wallet, somewhere it will sit on a card, somewhere it will sit on a two bank accounts, and many times it also sits with a friend. So like if they go to a restaurant, right? So one person will make a payment and everyone else will Paytm him. Okay. Now, how do you imagine that it is his expense or it is a collective expense? Okay, and how do you expense it out in your cash flows understanding, or how do you take the income which is coming from which is the credit which is coming from other friends as a sharing of the bill? Yeah. So these are the things which was like a completely different way of looked at. Okay, in a traditional institution, all we have said that, hey, this is like a random incidence. We will not make a policy for here. Here you are constantly re-engaging with the ecosystem and improvising on the policies. So this is completely different world which we would have imagined. And we always say that the management is away from the ground and all. And here I can see it happening, that even though we said that we are the startup guys, okay, that means we are building for the consumer, and at the same time at the assumption level we were so much away. Okay, and whenever you create an assumption, you create a product. Okay, that is always in a hindsight, right? So something has happened, you assumed and you built it. Okay, but what is happening in future, okay, is always improvising or a changing. So it's a continuous improvisation of your policy, your user experience is a very different than building for 10 years. So here you don't build for 10 years, you don't build for things for 5 years, you build for a product. You build product which is relevant today, could be relevant for another couple of quarters, and then you start thinking that how are you going to re-engage with or keep your customers engaged with you. So it's a pretty different ground to operate. So you have a couple of variables which is the guiding factor, that how you want to run an organization in terms of operating environment or credit risk or the business risk. But beyond that guiding principle, everything is moving.
Do you read in general business books, that kind of stuff?
Yeah, earlier I used to less business books, but lots of mythologies and all that we read, because lots of stuff I personally feel is more like a repeat. Many things has happened. It's like re-repeat and all. So that gives a very good understanding of a current context with how it's analyzed in a retrospect. But some business book also, but not so much of a business book. It's still more around your stuffs like Yoga Vasisthas and Gitas and all, which gives clarity, even contextual clarity also, on how to deal, how to deal with a situation, or how to approach a decision.
Sure. What's the most insightful book you've read of late, recently?
Yoga Vasishtha. It was like a life-changing book for me about 1.5 year back at the beginning of a pandemic, which just expanded even the middle class mindset. So like as I say that I have been evolving with the time. I have been more of a society guy. I have been more of someone who has been shaped by the society. But Yoga Vasishtha just expanded the thinking that, hey, I mean, it's like what you manifest is what you are out to do. So that was a great revelation, which happened for me.
Pretty interesting. The funny thing is, there's an author called Lynn McTaggart, and if you've heard the name, she has authored a couple of books. One is called The Intention Experiment, and the other one is called The Field. And the Field. Essentially, the essence of what you just described is that life is a self-fulfilling prophecy. and that's the essence. And in these two books, it is one thing, because in the Indian spiritual realm, there has always been a concept called the darshana, which is there is that other person who has seen that ultimate reality, and therefore they're expounding on that reality. And most of these books related to yoga, Gita, are books by those people that have seen that reality. What Lynn McTaggart's books do is give you a lot more from your own world, our own reality, experiments that were done to show that this is exactly how life behaves. So for example, at the atomic level or subatomic level, the funny thing is a proton and a neutron, they're not static. When you observe them, they actually move. So the funny thing is, then you are thinking, is it the observer or is it the observed? So it's an interesting, when you rise above at the atomic levels, there are a lot more fascinating stories. So if I had to encapsulate all of that into one sentence, it's life is a self-fulfilling prophecy. Interesting, you should mention that. So Satyam, this has been an amazing conversation, and I know that tiny bits that you spoke about, the evolution of fintech, we are always used to talking about blue oceans and white spaces, but finding niche white spaces and capitalizing on them is also a nuance. And if you look back at many products, perhaps that's what they in effect actually did. Many of them did not create vast new spaces altogether. Perhaps they found a new way to that particular aspect itself was a white space. So you brought that to light, and it was good to have you. We know that whenever you scale your next peak, Maharajas of Scale will come back and speak to you and talk about how the paradigm has changed and how you changed the paradigm. Any closing comments before we sign off?
Thank you very much, Krishna. It has been a pleasure interacting with you and talking to the audience here. It has been absolute fun and not much to elaborate further.
Thank you, Satyam. We wish you the very best.
Thank you very much. Bye.
Thank you for listening. If you enjoyed listening to the show and want to help support our show, please leave us a review by visiting our website maharajasofscale.com/reviews. It helps other people like you discover the show. I totally appreciate your support. If you're a founder or an entrepreneur or anyone interested in or working with startups, this show is where you see discussions in depth about founder stories, their playbooks, and learn more about growth strategies. Visit our website for regular updates or wherever you get your podcasts and discover more awesome episodes. I'll see you on the next episode. Click on the bell icon and hit subscribe to get the latest episodes.